Hello there. Welcome to Financial Accounting and 5. Still working on a paper from June 2023. So this is the most recent question paper that we have in Financial Accounting and 5. Right, so I welcome you back again. Uh, we are going to look at this question, which is a question 2. And this question requires us prepare some statements beneath. Uh, the required part is at the end of the information. So I'm going to go through with you the question, and we see what information we have there before we start answering the question. Right. Let's start from the beginning. There we have got the question reads: the following information was given about the partnership of Paul and Ibrahim. So remember, this is a partnership, and the partnership is a business whereby we have got two or more people that are operating a business. And we know that we've got three different types of business that we can look at. We've got a sole trader or sole proprietor, that is one person operating a business. We can also have partnership when they become two or more. We now call it a partnership. And then the business might also grow and now become a company, and it has to be registered by the registrar of companies. So those are the three different types that we have: sole trader or sole proprietor, and then we have got a partnership, the second one, and the third one we've got a company. So those are the three different types. So this one is on partnership. We've got two people that are operating this business, so we call it a partnership. Uh, so the first part they are saying the balance of the partners on 31 April 2020. We are given on the part A capital of 4 is 640,000 rands, and it's a credit balance. So we are going to the credit side, and that's where we're going to see our balance BD for 4. And then we go to Ibrahim, also 785,000 rands. And CR definitely means credit. So this one also on the credit side of Ibrahim in the capital account. We are going to have that balance. Then part B saying current account of 4, we have got 5,600 rands on the debit. DR means debit. So this balance is on the debit side of the current account at the beginning of the period. So we're going to see a balance BD on the debit side of 4 in the current account of 4. Then we have got Ibrahim 2090 credit. We see a balance BD on the credit side of current. Right, to go to item C saying during the year drawing amounting to 270,000 rands for Paul and 296,000 for Ibrahim. So these are the figures for drawings that we have for these partners. And we know that drawings, we are going to adjust them in the current account, and they go to the credit side of the current account. That much we know. Then we go to D. The loan borrowed from Ibrahim by the partnership was 60,000 rands, and only 3,000 interest on the loan was paid out to Ibrahim. So what does it mean? It means this is a loan that was borrowed from Ibrahim, and which means this loan has to be repaid by the partnership to Ibrahim, but Ibrahim is also a partner, and we know that Ibrahim is also part of the current account. So what it means is that out of the interest that was supposed to be paid to Ibrahim, only 3,000 was paid. So what we are going to do, we are going to calculate the interest that was supposed to be paid to Ibrahim, and obviously this interest is going to be greater than 3,000, because obviously we are being told that it's only 3,000. So we expect that interest that we are going to calculate to be more than 3,000. So what it means is what was paid was less than what was supposed to be paid. So we're going to see the difference, and the difference we are going to transfer it to the credit side of the current account. And remember, this interest payment belongs to Ibrahim, is going to be paid to Ibrahim. So what is not paid should increase the current account balance. So we are going to credit it in the current account, right? Then we go to the second item. Let's try to see there on number 2. Number 2 is saying the net profit for year ended 31 April 2020 was 378,600 before the interest amount and partners agreements were taken into account. So this is the net profit figure that we are going to start with in the statement of profit and loss and other comprehensive income. But we know that this figure, interest is not yet subtracted there. So we need to calculate the interest that we have in the question, and then we subtract it from 370,600, and then we make other adjustments that we are supposed to subtract there. Obviously, we are going to subtract the salary of a partner that is being paid a salary monthly. Remember, salaries are going to be monthly. and others, we can have a salary also that is paid annually. So that one that is going to be paid monthly, also we subtract to arrive at total comprehensive income for the year. Right, that's what we have there. We also go to the next additional information. Uh, so the partnership agreement states the following. That's on item 3. Provision should be made for interest on the loan to and from partners at 12.7% per annum. So this is our interest on loan. So this is the rate that we are going to use with the loan that was given to Ibrahim. We are going to use this rate of 4.7%. Obviously, we have 60,000 there for the loan, and then we say 4.7. We multiply it by 60,000. So that's what we have. Then we go to the next one. The partner Paul is entitled to a salary of 5,000 per month. So this is what I was saying. So this salary, we are going to subtract it just beneath the profit or loss figure that we have there of 378,600. So we are going to adjust this salary in the profit or loss, in the statement of profit and loss and other comprehensive income. That's why we're going to adjust this salary because it's paid monthly. But this one for Ibrahim, 84,000 is per annum. We adjust it in the current account because it's being paid annually. So that's the most easiest hint that I can give there in terms of allocation of where we adjust for salary, which is being highlighted as paid per month, and that one that is being paid per annum, which is yearly. We'll go to the next sentence. Is saying Paul received 9 months salary and Ibrahim received 8 months salary. So what does it mean? These are partners that we have, Paul and Ibrahim, and they were supposed to be paid their salaries. So we are going to calculate what Paul was supposed to receive. We say 5,000, then we multiply by 12, because this is per month, and then we get the total that was supposed to be received by Paul. And then we are told that 9 months salary was only received. So it means the other 3, if you say 12 minus 9, we get 3. The other 3 is not yet received. So that amount that was supposed to be received and was not received is supposed to increase also the current account balance. We're going to credit in the current account. And the same is going to happen to Ibrahim. Ibrahim received 8 months instead of 12 months. So what it means, this one that we are given is for 12 months. So but Ibrahim received 8 months. It means the 4 months is not yet received. So we are going to make a proportion of 4 months. We calculate the salary for 4 months, and that salary is not yet received. We are going to credit it in the current account again because it's not yet received. It's going to increase the current account balance. So that's the adjustment that we are going to make there. Then we go to see provision should be made to create a general reserve at 2% of the net profit before the appropriation. So what this statement means is we are going to transfer a certain amount of 2% from the appropriation, and then we create an asset replacement reserve. So that's the issue that we have there. So we're just going to say 2% let's see, there is 2% of profit before the appropriation. And the profit before the appropriation, the figure that we are given there, if we come here, let's try to see the figure that we have there. This is the figure that we are given, 380. Let's try to see where it is. This one, 378,600 is the profit before appropriation. So this one, we are going to say 2% of this one, and that amount we're going to transfer it from the appropriation, and then we create an asset replacement reserve. So that's what we have on this one. Then we go to D. The following interest rates were supplied to the partners' accounts. We have got interest on capital at 10% per annum, and interest on current account at 14% per annum. Obviously, we are going to look at the balance that we have. We calculate 10% of capital for Paul and Ibrahim. We credit those amounts to the current account, and also we do the same to the current account balances. So the debit balance that we have on the current account, we are also going to put the interest on the debit side. So that's what we are going to do there. And we know that we are also supposed to know that when we credit the current account, it's a positive because it's increasing the current account balance. The current account balance is the normal credit balance. The same applies to a capital account. So when you are crediting the current account, we are adding, but when you are debiting, we are separating. So the debit balance will be shown as a negative figure, and the credit balance will be shown as a positive figure. Then we go to interest on drawings at 5% per annum. We are going to calculate again 5% of the balance that we are given for drawings. And then obviously this interest on drawings are going to debit it in the current account. And when we are in the appropriation, we add it there from the figure of profit, of net profit that we are given there. Right, that's what we have there. And the total for drawings, we know that also is supposed to go to the debit side of the current account, but it's not adjusted in the appropriation. Total figure for drawings, that's the adjustment that we have there. Then we've got the next point saying the partnership profit was shared equally amongst the partners. So after we've made all the appropriations that are supposed to be adjusted, we are going to share the profits equally. So we know that all these arrangements are made in the partnership agreement in terms of the interest on capital calculations, rate, interest on current, on the issue of interest on drawings, how the profit or loss sharing ratio. These are agreed before the partnership commences, and it will be stated in the partnership agreement. That's the procedure that is supposed to be there before the partnership starts to operate. So we can check again if we have got something. So these are the last items that we have. Then we go to the required parts. The required part is saying, first part is saying statement of profit or loss and other comprehensive income of Paul and Ibrahim Traders for the year 31 April 2020. So we're going to start with this one. Then we go to the statement of changes in equity for the year ended 31 April 2020. Then lastly, we are going to prepare the current account of Paul, and then prepare the current account of Ibrahim. So on this part of the current account is going to be very easy for us, because we will be just transferring the figures that are in the statement of changes in equity, and we just put what is supposed to go in the credit, and what is the positive figures in the statement of changes in equity are going to the credit side of the current account. Negative figures in the statement of changes in equity will go to the debit side according to the partners. So that's what we have there. This is the last part. So we are going to start there on the statement of profit or loss and other comprehensive income. So in this statement of profit or loss, the first figure that we are going to start with is profit or loss. So if we come back here, let's try to see. If we come back here at the beginning of the question, we are given this figure. We are given this figure here, 378,600. So this figure is going to be our starting figure in the statement of profit or loss and other comprehensive income. So if you come here on the answer section, we've got that statement that we have already prepared. This is the statement of profit or loss and other comprehensive income of Paul and Ibrahim Traders for the year ended 31 April 2020. So the figure that we start with there is the figure for profit. Profit is the figure for profit or loss. So this figure for profit or loss is the figure that we have highlighted there, which is 378,600. And remember, we had indicated that this figure we haven't subtracted the issue of interest on loan. So we need to subtract interest on loan. So here we just say less expenses. This is less expenses. And obviously the expense that we are talking about here is interest on loan. The interest on loan. Right, we are going to have the interest on loan there. Interest on loan. And then we try to see, according to the information that we are given, how do we calculate it? So if you come here, let's check where we have that information of interest on loan. Let's try to see. Right, we are here on 3A. Provision should be made for interest on loan to and from partners at 12% per annum. So it's going to be 12% per annum, and we see the amount of the loan. The amount of the loan that we have there is 60,000. So what are we going to say? We are going to say 12% is 0.127 as a decimal. Then we multiply by 60,000 to get the interest on loan. So let's try to calculate that one. 0.127, then we multiply by 60,000. This is the interest that we are supposed to subtract there. Right. If you come back here, let's check here. If you come back here, on the figures that we are given there, uh, we are given it as so if you calculate that one, which is 0.127 multiplied by 60,000, you're supposed to get 7,620. 7,620. So if you come here, so you'd see that this interest in loan, we are not supposed to adjust it here, because remember, this is not part of expenses, but this is a finance cost that is adjusted after expenses are adjusted. Remember, interest on loan, we don't include the other operating expenses in the income statement. We adjust it after the net profit, after we have calculated, we have said gross income, subtract operating expenses, then we the net profit figure that we get, operating profit, then we subtract the finance cost now as interest on loan. So we cannot include it here. That was a mistake. So here, what we are supposed to include is the figure for salaries. So if we come here, this salary that I said is being paid monthly is the salary that we are supposed to adjust there as an expense, because that salary which is paid monthly is part of the operating expenses. So here, this salary of 5,000 per month is the one that we are supposed to input under the expenses. So we are told that it's 5,000. Then we multiply, this is per month. So per year times 12. So if you multiply there, you get 60,000. You are going to get 60,000. So this 60,000 is the one that we are going to put there, and this salary is for 4. So we go there in our answer section. We are going to say less expenses, then we say salary. And this salary is for 4. And to calculate it, we said 5,000 rands. We multiplied by 4. And we got 60,000. So that's what we have. Remember here we are going to put the whole figure that was supposed to be paid to 4. Remember, this is a statement of profit and loss, and it's prepared according to the matching concept or the accrual basis. We don't record what was paid. We record what was supposed to be paid. That is the accrual basis. And it also goes on and says what belongs to this year should be recorded this year. What doesn't belong to this year should not be recorded this year. That's why we adjust for accruals and prepayments, whereby we say accruals, the money wasn't paid, but it belongs to this year, so we add accruals. The prepayments, we are saying we paid something for the following period, next period that is going to come, but it doesn't belong to this period. So that's why we subtract it to remove it. It will remain with what belongs to this period. So that's what we are doing here. We are abiding by the matching concept. So there we've got 60,000. And then this is only expense that we have. So this represents the total expense that we have there that are going to reduce this amount of profit or loss. So this 60,000 is the expenses figure. Will come here now to represent that it's expenses. And here we are saying less, so we are subtracting. So we can show in brackets here. Here. Then we go on now to subtract the finance cost. Less finance cost. That's where we are now going to include that interest on loan. So we have got interest on loan. And remember this interest on loan, we had said 60,000, and we multiplied by 0.127 as 4%. So this is the calculation that we made there in terms of interest on loan. It's here 0.127, then you multiply by 60,000 to get 7,610. So that's the answer that we have there. Then here we have got 7,620. If you come here now, here we've got 7,620. And this represents the finance cost, and finance cost is here, so we're going to put the figure for finance cost here. So it's 7,620. And remember also, we are saying less here, so we are subtracting, so we can show by in brackets. So that's what we have. Then we are also supposed to now calculate the net figure for comprehensive income. So what we are going to do, we are just going to say the figure 317,600 subtract 60,000, then we subtract 7,620. So if we calculate that one, the answer is supposed to come here, which is 310, 900, 310,980. And this figure represents total comprehensive income for the year. Total comprehensive income for the year. So that's what we have there. For the year, now we are. So that's what we have. So this is the final figure that we have here. Right. So this figure is the figure that is the total comprehensive income before the appropriations are taking place. So that's the figure that we are also going to start with in the appropriation account. So we're going to start with this figure, 310,980. Then we make the appropriations that are supposed to be adjusted below that. So if you go to the next question, according to our question, the next statement that we are supposed to prepare, let's try to see. We are here now on the second part. Second part is saying statement of changes in equity for the year ended 31 April 2020. So remember, when we say equity, this also refers to capital. This is the capital or the owner's part. Capital, or basically we are just saying owner's part. So anything that is going to affect the owner's funds is going to be adjusted in the statement of changes in equity. We are going to see that the current account, the capital account also affects a part of the owner's funds. And also appropriations. In appropriation, that's where we are, in the appropriation account, that's where we are going to see the profits that are being made by the business, and we know that profits belong to the partners. And at the end of the day, these are the profits that they share, and so they belong to them. So they are the owners' funds, and the partners are the owners of the partnership. So they are going to be adjusted there in the statement of changes in equity. Then also we have got any reserve that is going to be there, we also adjust it in the statement of changes in equity, because the reserves also belong to the owners. So that's what we have. Then we go now to the other section in terms of the layout now of the statement of changes in equity. So if we come here, this is the statement of changes in equity that we have here. Statement of changes in equity of O&E Prime traders for the year is at 31 April 2020. That's where we have the year, that is the year ends there. So you can see that we've got those columns for here, we've got details, and then we've got capital for O&E Prime, and then current for O&E Prime. Then we've got the assets replacement reserve here in this column. Then we've got appropriation adjustments are going to be made in this column. Then obviously the total equity will be now putting the total figures there in the total equity section. But in the total equity section, we are not going to put all the figures that we are going to put here. We are just going to put the total for the opening balances here. We put the total there, and then the comprehensive income that we got there in the statements of profit or loss and other comprehensive income. We got 310,980. So we are going to edit there, and then we subtract the drawings figure. Remember the formula that we employ when we are calculating the changes in equity. We say opening capital or opening equity, and then we add the net profit. If there's a profit, if there's a loss, we subtract profit. Then we also subtract drawings to get the closing owner's equity figure. So those are the adjustments that we are going to make in the total equity section. So for total equity, I think we can just summarize the formula there that we are going to employ on the total equity section.
So the total equity section, the figures that are going to be in that column are the opening equity there, which is total of all the current account, and then we add the capital account balances. Then we add net the profit that is coming from the statement of profit and loss, which is total comprehensive income for the year. Then we subtract drawings. That's now we get the total equity balance at the end. So this is the end balance or closing equity. Right. In other questions, we might have additional capital that is there in the question. So it means our formula now would be opening equity, and then we add an additional equity that is been introduced during the year. Then we add profit. If there's a loss there, we subtract a loss there. And then obviously drawings is supposed to be subtracted to get the closing equity. So that's the formula that we are going to use there. So the figures, those are the figures that we are just going to put in the total equity column. So we come here now, and what we are going to use, we are going to start with the opening balances. The opening balances. So the balances that we have at the beginning, we put them in the at the beginning of that statement. So we are going to get those balances in the question. Go back to the question to check those balances. We are being told that here we have got a capital. So on 4 capital, we are going to put 640,000 as a positive figure. Remember, I said in the capital account, if we have got anything that is credited, we show it as a positive. But when we debit, we show it as a negative. And then the same applies to the current. A positive balance, a positive entry is on the credit side. A negative entry is on the debit side. So that's what is going to happen in terms of the capital and current. So the only figure that is going to come to the debit is this one for current for 4. It's going to be a negative there is an opening balance because it's on the debit side. Then for Ibrahim's credit, so it's going to be a positive figure. So let's try to see. So we've got 640,000 for 4. For Ibrahim, we've got 785,000. For 4 current now, we've got 5,600 as a debit. Then Ibrahim 2090 as a credit. So it's positive, 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 and negative. So we can just indicate there that here it's a positive in that statement of change in equity. This one is positive again, positive, but this one will show it as a negative because it's the debit balance. So we come here. Remember for 4, we have 640,000, so we are going to say 640,000. Then for Ibrahim, we have 785 as a credit again. On the capital part, 785,000. Then for current account, for 4 is the one that is a debit balance, which is 5,600. And we are going to show it as a negative, show it in brackets. Then Ibrahim, we've got a credit balance, which is also a positive 2,090. So that's what we have there. Then we also have for total equity now, we are now saying this one plus this one minus this one plus this one. Then if we do that, you are going to get 1,421,490. So that's what we have there. And then the next step, we are supposed to now to introduce the figure that we got in the statement of profit or loss, which is the total comprehensive income for the year. We are going to put it in the appropriation. This is the opening balance in the appropriation. So here now we have got total comprehensive income for the year. So you can just maybe say income for the year. And then this one is on the appropriation part, which is 310,980. 310,980. And obviously, those figures that goes to the credit side of the current account are going to be shown as positives, like what I said. And then those that goes to debit are going to be shown as negatives. And the main figure that goes to the debit is the interest on drawings and also the drawings figure. Drawings balance also goes to credit of current account. So in the current section there, they'll be shown as negatives, the interest on drawings and the drawings figure. Those are the main ones that we see on the debit of the current account. So if you go back again to the question, let's go back to the question. That's where we got figures. If you come here, let's try to see where we got those adjustments. We can start with this one. We can start with let's try to see there. Let's go to the salaries part. We have got partner 4 is entitled to a salary of 5,000 rands per month. It's entitled to a salary of 5,000 rands per month. And Ibrahim 80,000, 84,000 per annum. 4 received 9 months salary. Let's start with 4. We said 4 was supposed to receive 5,000 times 4. We calculated that figure and we got 60,000. We got 60,000, but we are being told that 4 was received only for 9 months. And we are saying the month that 4 didn't receive is 12 minus 9. So it's 3 months. So we want to see what is the total salary for this 3 months that 4 didn't receive, and that amount we need to credit it in the current account because it belongs to 4, but 4 didn't receive. So it's going to decrease the balance in the current account. So here to find the proportion of 3 months, we are saying this is 60,000 is 12 months. So we are saying 60,000 is equal to 12 months. So the amount that we need is 3 months. So obviously we are going to give a lesser figure. So we just make a proportion there and say 3. The smaller figure is the figure that we want. So what we are looking for becomes the numerator, and what we have becomes the denominator times what we are given, which is 60,000. Then we make a proportion there as simple as that. So when we say 3 over 12 times 60,000, there in the form of the salary, we are going to see that for 4, let's try to see what the amount that 4 is supposed to get there. When we calculate that, let's try to calculate that one. So here, when we calculate here, we are going to get 15,000. So this is the figure that is representing the salary that haven't been paid to 4. So this one is going to increase the current account balance in the T account of the current account. When you are going to open the current account balance, you're going to put it on the credit side, but it's not going to be adjusted in the statement of change in equity. Why? Because in the statement of change in equity, we only adjust the figures that are being adjusted in the appropriation. Remember, the salary for 4, we said this one is monthly, and it has been adjusted under operating expenses, and it's not being adjusted in the appropriation. So what is being adjusted in the appropriation is all the figures that are being adjusted in the appropriation are figures that are going to be adjusted in the under the current account column in the statement of change in equity. So this one you can only adjust it in the T account. So what is going to happen here is that this one we will adjust it when you open the T account of the current account of 4. And then if you go to Ibrahim again, we are being told that Ibrahim was supposed to be paid 84,000, but received only 8 months. So it means Ibrahim didn't receive 12 minus 8, 4 months. So that's the issue for Ibrahim. So the total is 84,000. So we can calculate for 4 months. So we can do the same by saying 4 is equal to, and then the one that you are given is 4, which is equal to 84,000. So this one obviously is going to be less. So as a proportion, we are going to say what we don't have as a numerator and what we have as a denominator times what we are given is 84,000 then over 1. Then obviously there, when you calculate it, there, you are supposed to get 28,000. Here you get 28,000. You're going to get 28,000. So 28,000 is the one that we are going to put in the T account of Ibrahim. So in the statement of changes in equity, we are going to adjust the whole 84,000. Since in the appropriation, we are going to put 84,000. We are going to subtract 84,000 as the salary for that period. Remember, the appropriation will be applying the matching concept. We apply the adjust the whole 84,000. So that's what we are going to adjust there. So if you go back there, it means we are going to salary now. On salary parts now, we are going to say here we say salary. And the salary that is going to adjust in the appropriation is for Ibrahim, since it's adjusted as an annual salary. And then this salary is 84,000, so it's going to be initially deducted from the appropriation. And also we adjust it under Ibrahim column there for current account, 84,000. So we don't deduct it as such, but we are going to put it as a credit, so it's going to increase the balance for the current account for Ibrahim. So it's going to be 84,000 there. So that's what we have for salary. Then you go on to the next one. Next one, you can go to interest on capital. Interest on capital. Then you go to the question and try to see what the instruction is saying in terms of interest on capital. So interest on capital, let's go to the next section to see what are the agreements in terms of interest on capital. Interest on capital is 10%. So basically, we're just going to say 10% of the capital balance that we have for each partner. So here we are giving that for Paul, we are saying it's 640,000. That's the capital that we have for Paul. Then you multiply by 10%, which is 10 over 100. Obviously, they are going to get 64,000. So this is the figure that we are going to put for Paul, and it's going to be subtracted in the the 64,000 will be subtracted in the appropriation. Remember, interest on capital is subtracted in the appropriation, and whatever has been subtracted in the appropriation, we are going to show it as positives under the current account. So we go there. Subtract it. Here we're just going to put the total figure for appropriation. So let's start by putting 64,000 for 64,000 for Paul. 64,000 for Paul there. So we put 64,000 for interest on capital. 64,000 is a positive figure. And then for Ibrahim again, we check in terms of what is the amount we have there. We also have we're also going to apply 10%, which is 10 over 100. So we can say 10 over 100. Then we multiply by the capital figure for Ibrahim is here 785,000. So obviously, when you calculate that one up, you are going to get 78,500. So that's the interest on capital for Ibrahim, 78,500. So here we are going to put 78,500. Then we add the two now to get the total that we are going to subtract in the appropriation. So if you add 64,000 plus 78,500, you're going to get 142,500. So remember, we are saying we are subtracting this figure in the appropriation, but when it's now under the current account, it will be a positive figure. So that's what we have on interest on capital. Then we can move on to the next one. We have got a transfer the transfer that is there to the general reserve. Transfer that is there, so you can just go there and try to check that transfer. Let's try to see where we've got information in terms of transfer. Right, this one, provision should be made to create a general reserve at 2%. Provision should be made here. That's where we've got the statement saying provision should be made to create a general reserve at 2% of the net profit before the appropriation. So the net profit before appropriation, remember, is the figure that we are given there, that we found in the statement of profit or loss. When you prepare the statement of profit and loss, you can go back and check that figure. When you prepare the statement of profit and loss, we are here. Right, the figure that we got there, this is the figure that we got when we prepared the statement of profit and loss. We got this figure, which is 310,980. So this is the figure that is being said 2% of this figure. So we are going to say 2% of that figure. That is the profit before appropriation. And that's the figure that we have there. Here, 310,908. So if you go back there, you see that the statement is saying provision should be made to create a general reserve at 2% of net profit for appropriation. So we are going to say here 2%, which is 0.02 is the decimal. Then we multiply by the 310,980. That's the profit before appropriation. There, let's try to calculate that one. 0.02. Then we multiply by 310,908. Then there you're supposed to get 6,219.60. 6,219.60. 219.60. So that's the figure that we are going to transfer from the appropriation, and then we create an asset placement reserve. So here we come back to our answer section. For the answer section now, we are just going to say this is a transfer. We can just say general reserve here. Right. When you say general reserve, we are going to take it from the appropriation, subtract it from the appropriation. Then here on replacement reserve is now appearing as a positive. So 6,219.60. And then we show it as a negative since we are taking it from the appropriation. Then we are putting it here under the replacement reserve, becomes a positive. 6,219.60. So that's what we have in terms of general reserve. Then we can also check for interest on drawings. Let's try to check for interest on drawings. So you see that for interest on drawings, again, I think the information we have is there again. Right, interest on drawings is 5% per annum. So it's 5% of the figures for drawings that we are given. Balance for drawings 5%. So you go back there to the information of the balances. You see that in terms of drawings we are given there. That's here. That's where we have got the information for drawings. So it's saying during the year the drawing amounted 270,000 for Paul and 296,000 for Ibrahim. And the rate that we are given there is 5%. Let's just check the rate there so that we don't make a mistake. The rate is here 5%. Interest on drawings 5%. So we come back here and we are now saying 0.05. This is a decimal 5%. And then we multiply. This is for 4. for 4 and you multiply by 270,000. Right. So if you do that for interest on drawings for 4, you're going to get 13,500. So you can just go there and put that 13,500 for interest on drawings. So here we are saying interest on drawings. Then for 4, remember the column for 4 is the first column. We are going to put it under the current account. So let's try to see the headings of our columns there. We are seeing that 4 is here. So we are going to put here figure for interest on drawings, which is 13,500. And remember, interest on drawings, we said they are added in the appropriation, but when we come to the current, they will be showing them as a negative. So here is 13,500 under 4 as a negative, but on appropriation, we are going to show it as a positive. But we are going to add again figure for Ibrahim. So we have to find the figure for Ibrahim first, and then the total we add it under appropriation. So that's what we have there. So we go back to calculate for Ibrahim in terms of interest on drawings. Right, for Ibrahim now, we have the balance is for drawings is 296. So we are going to say this is now Ibrahim. We are going to say 0.05, then we multiply by 296,000. Get the interest on drawings for Ibrahim. So if you calculate that one, you get 14,800. So that's what we have for Ibrahim. So you're going to put that figure for Ibrahim, 14,800. So it's here. We are again showing it as a negative. We are still in the current account. Then the total now, we are going to put it for appropriation. Add this one plus this one. We're going to put the total figure here. 13,500 plus 14,800, we get 28,300. So here it will be now a positive 28,300. Right, so that's what we have. Then we are going on to the next one. For interest on drawings, now we go to interest on current account. So that's the next item. Obviously, we've got some explanations in terms of calculations. Interest on current account. Then we go to the explanation in terms of how do we calculate it. We are given here we have interest on capital. The interest on current account is 14%. See, we go back again to see the balance of currents that we have them here. So we can as well try to see how we can calculate that one. We can now calculate. We are seeing that the percentage that you are given in terms of interest on current account, you can recheck here, it's 14%. So we are going to use 0.14 as a decimal. Let's start with 4. 4 is saying 0.14 times 200. Sorry, interest capital current account is here. 4 is 5,600. Sorry, 4 is 5,600. But it's a debit balance. So the treatment is then going to be opposite to what we are going to do to Ibrahim. So when you say that 0.14 times 5,600 on interest on capital, you're supposed to get 784. So this one will be on the debit side of the current account. Debit side of the current account. And so here now in the since here we are only going to show them as positive and negative figures. It means we are going to show it as we are going to show it as a negative figure. Remember, interest on capital, I will show it as a positive figure in the current account when they were credit balances. But when they are debit balances, we show them as a negative. So for Ibrahim, we have got a credit balance, so we are going to show it as a positive in the current account. So this one would be a negative in the current account. So we go back here and say interest on capital account. This is for 4, and we have got 784 as a negative. Put it in brackets. Then we go and calculate for Ibrahim. So for Ibrahim now we are saying 0.14. And then the current is a credit of 2090. So if you calculate that one, you're supposed to get 292.60. So this one now becomes a positive in current account. Becomes a positive in the current account. So it's 292.60. And remember now, when we are now in the appropriation, we are now adding this one plus this one. So basically, what we are saying there, we are saying, let's try to calculate that one. We've got 2 different signs there. So what we can just do there, we can just say negative. This is a negative figure, 784. And you add 292.60. Obviously, here the greater sign is a positive, so the under will be a positive. So if you add that negative 784 plus 292.60, or you can rearrange it to say 292.60 minus 784. So that's what you can do there. Then you can get what you are supposed to get there. Let's try to see. Let's try to calculate that one. The 2 different signs that we have there. So if you calculate that one, obviously you are supposed to get negative 491. You get negative 491, negative 491.40. So what does it mean? It means we have got a negative figure. Remember what happens, what we are doing there, we are saying the sign that we have here would be opposite to what we have there. Here, when we added these ones, we got a negative 2300, but in the appropriation, so we represented it as a positive. Then here, we also got a negative 491. So it means we are going to put it again as a positive of 491. So you've got 491.40 here. 491.40. So that's what we have there. Right. Then we can go on. We can go on now. We have interest on capital. So we can see what we can adjust next. Right. Remember also we are supposed to adjust for drawings. So the next one is drawings. In drawings, we are just going to adjust it in the current account. It's not going to be adjusted under appropriation. We know that in the appropriation we don't adjust for drawings. We are going to just make an adjustment in the current account, and then also it's going to change the figure for total equity. Remember, we said total equity. The formula for finding closing equity, we said opening equity plus the income or the net profit that we got, and then we subtract the drawings. So this is the drawings that we are going to subtract. So let's see the figures for drawings. We're just going to enter the figures, the drawings that we are given in the question. If you come here, drawings, we have 270,000 for Paul, and we've got 296 for Ibrahim. 270,000 for Paul and 296,000 for Ibrahim. So that's what we are just going to enter there as whole figures. Here, Paul, we have 270,000. And then for Ibrahim, it's 296. And remember, drawings, we see them on the debit side of the current account, so they will be negatives. And then the total figure is going to come under the equity
section, the equity section, and you would see that, let's see, I think here we were putting figures in the home column. Is it right? Let's see here. It's appropriation, it's correct. We are putting in the correct. You can just remove these ones. Remember we said for equity we are saying opening equity figure, then you add the income. This one 310,980 is supposed to be added here. So here this figure is supposed to be here 310,980. This is the figure that we got. When we add this one, we now subtract the figure for drawings, is the figure that we are calculating now. We are supposed to subtract the figure for drawings. This is the figure that we are calculating now. It is going to come this column. So if say 270,000 plus 296,000, we are going to get 566,000. So here we have 566,000, and we subtract it. Remember, we said opening equity plus net profit. Then we subtract the figure for drawings. So that's what we have. Then we've got partners' shares now. Partners, we have adjusted everything that needs to be adjusted. So we are now going to the sharing part. This is the profit sharing now that we are. Then we check in terms of the condition of sharing profit. Net profit for the ended, we have it on the next page. Let's try to see. Right, on the next page, we are saying the partnership profit was shared equally amongst the partners. So we are going to say the profit available to be shared, we divide by 2. That's equal. So how can we find this profit available to be shared? We are going to use the column for appropriation. That's where we are going to find that figure. So what are we going to do? We are going to start from the top on the appropriation part. Remember, we are here on the appropriation part. This is the appropriation column. So we are going to say 310,980. We are going to subtract 84,000. Then we subtract 142,500. Then we subtract 6,219.60. Then we add 28,300. Then we add 491.40. So when you do that, when you calculate it like that, this is the last figure that we have, 491.40 in the appropriation section. So when you calculate it like that, you are supposed to get the figure that you are supposed to get there is 107,051.80. This is the figure that you get. So this is the figure that you are going to share equally. So we're going to divide it by 2. So when you divide it by 2, let's try to divide it by 2 there. This is 107 and 51. 107,051.80. Then we divide by 2. You get 53,525. Get 53,525.90. So each partner is going to get a share of 53,525.90. So this is the share that we are going to use here. So on the profit shares, we are going to put them in the current account again. So we have 53,000. 53,000 is 53,525.90. And the same figure is going to go to Ibrahim, which is 53,525.90. So when you add the 2 now, that's the figure that you get for appropriation here, which is we got it here, which is 107,000. 107,051.80. So that's what we have. And then at the end now, we have got now the balances now. So at the end now, we are now having the balances. So we can say balances. These are the closing balances that we have. So on the capital side, we see there's no adjustment that is taking place. We don't adjust anything under the capital columns. We are going to take those figures, 640,000 for Paul and 785,000 for Ibrahim, and put them there as our closing balances. So here we are going to say 640,000. And here we are going to say 785,000. Just balances. Then here again, we are going to have to make a calculation from the top. We add and where is supposed to be added, we add. Where is supposed to subtracted, we subtract there. So the balance that we are going to get there is 172,354. Let's try to add there. Let's try to confirm the addition. Starting from 64,000. Let's try to confirm the addition there, 64,000, and then we subtract 18,500, and then we subtract 6,000. This 64,000. Then we check there. I think we've got also an opening balance there. Let's start from the top. We have got an opening balance that is here, negative 5,600. You can start there, negative 5,600. Right, so after calculations for Paul, we are supposed to get 358.10, and it's a negative figure. Then for Ibrahim, it's a positive figure of 92,391.50. And then that's where we are going to put our totals. For appropriation, we don't have any total towards this profit. We shared it so we took everything that was there from the appropriation. So what we are going to do now, we go to the balance. So sorry, the total equity section. So you'd see that the balance that we're going to get for total equity there, we add what's supposed to be added, and then we subtract what's supposed to be subtracted. The figure that we are going to get here, it's here. Sorry, we are saying opening equity. We added that net profit, and then we are subtracting the drawing figure, 566,000. Then the figure that we get here is 1,166,407. So that's the figure that we have in terms of statements of changes in equity of Paul and Ibrahim traders for the year ended 31 April 2020. So that's what we have. So we are left with the last part. We can check there what we have on the last part. Right? If you go to the last part of the question, the last part of the question is asking us to prepare current accounts. We are now on the last part, 2.3, which is saying current account of Paul and then Ibrahim. So we obviously going to check the balances that we are going to start with for Paul. We can start with the current account for Paul. And we go to the balances that we are starting with there at the beginning for Paul. Current account, we've got Paul debit balance of 5,600. So we are going to the debit side and put our balance PT for Paul in the current account. So if you come here, this is the current account that we have for Paul. So our balance BT is on the debit side. And we are given the balance BD is 5,600. And then obviously what is supposed to be put on the debit and what is supposed to put on the credit. We know that on the credit side, we are supposed to put interest on capital. That's obviously the interest on capital comes on the credit. And also the adjustment for salary. Remember, I said the difference that we calculated at that time is supposed to come on the credit also. The salary that haven't been paid. So interest on capital, we can check it again in the appropriation. That's where we've got our calculation that we did. So we're just transferring the figures that we have there. If you come here, interest on capital, interest on current here, then interest on capital, it's here. You see now, that's the interest on capital that we have 64,000 for 4. This is the column for 4. So we are going to put our 64,000 in the current on the credit side. So interest on capital 64,000. There we can put our 64,000. And obviously, for Paul again, we have got that salary. Right. So remember, we calculated that salary and said we calculated the figure that is not yet paid, and we found it as 15,000. If you still remember, we found it as 15,000. This one, when we said the explanation is here that Paul received 9 months salary. So this means for the 3 months we haven't received them. When it says 3 over 12 times 60,000, which is for the whole year, and we got 15,000. So that 15,000 is supposed to be on the credit side. So here salary 15,000. And then the share of profit also will come on the credit side. So if it's share of loss, we have to put it on the debit side. So share of profit will come here. Remember the figure for share of profit, we have it there. We can recheck again. That's the figure we calculated there, divided by 2. Find the proportion 53,525.90 is the figure for share of profit. So here is 53,000, 53,525.90. So that's what we have on what's supposed to be on the credit side. Right, so we also have some entries that we have to make on the debit side. Or remember, we also have interest on current account. So if you have got a credit balance of the current account, the interest on current account is supposed to come on the credit, like what we did on interest on capital. But if it's a debit balance, like what we have on PO, remember PO has got a debit balance of interest on capital, which is this one. So the interest on capital also is supposed to come on the debit. But for Ibrahim, we have got interest on capital as a credit, so we are going to see it on the credit side. So we come here on the debit side, then we say interest on current. And that interest we calculated, it's 784. We have 784. There we have 784. Then obviously we also have the figure for drawings and interest on drawings. Should come on the debit side. Let's start with the drawings. Those figures, we can find them there. They are there again. There we have what the balances that we have for drawings is here 270,000 for PO. So we are going to put that one 270,000. Then the interest on drawings also will come on the debit. Right, we check again there in the statement of changes in equity. That's where we calculated interest on drawings. So you see that our interest on drawings is here. This is for 13,500. So that's the figure that we have. So you have 13,500 there. 13,500. So that's what we have there. Then so we have all our figures now. So we can now balance our account. The current account now can now be balanced. Right. Let's try to balance it. We know that we are supposed to put double lines. Double lines there. Also on the credit side, we've got some double lines. So if you add the total of the debit and the credit, you are going to see that the total of the debit is a greater side. It is a total of 289,884. And it comes both sides in between the double lines. So if you say this total minus this one minus this one minus this one, you get the balance there. On the its balance CD, you come here is 157,358.10. And this is our balance CD. And obviously our BD will come at the opposite side below the double lines. So we are seeing that it's carrying on to be a debit balance for PO. Balance BD. Balance BD here again, we are going to put the same figure, which is 157,358. Sorry, here, there, we've got 358 here. 358, then it's 0.10. So that's what we have in terms of the current account of PO. Then we can quickly move on to the current account of Ibrahim. So this section is not very difficult because most of the figures we've calculated them above there. So we're just picking them and putting them there, right? We check the balance now of Ibrahim in terms of current account, the open balance, we get it there. We have got 2090 on the credit, so that's where we're going to have our balance BT on the credit side. So if you come here, let's come here on the answer section. Right, we have our balance BD on the credit side. So our balance BD, we found it there is 2009. And then obviously, we are going to have our interest on capital. Remember, it was a credit balance, interest on capital comes on the credit side. And our interest on our current account for Ibrahim is a credit balance here. If you check there, we've got capital for Ibrahim credit, and then current again for Ibrahim is a credit. So interest on capital and interest on current also come on the credit side. So here we are now here. So we have also interest on the current. Then we can just go there to check the figures that we have for those ones. We have already calculated them there. So we are just picking them from the statement of changes in equity. So you'll see that for interest on current for Ibrahim, remember this is the column for Ibrahim. Interest on current for Ibrahim is here 292.60. Then interest on capital it's here 8,000. 8,000. We are seeing it here. It's what? Let's see, 78,500. That's our interest on capital. Interest on capital is 78,500. Then our interest on current is 292.60. So those are the figures that we have. We can go down to input them. We can put them on the credit side. Right, that's what we have there. We are just going to put those figures. Interest on capital, remember, we got interest on capital is 78,500. Then for interest on capital, so interest on current now, we now have 292.60. Right, and we also have the figure for salary. we said the unpaid salaries is the one that is going to come on the credit of the current. So we come on the instruction of salary there. We have it here. They were saying for Ibrahim received 8 months salary. So it means the 4 months is not yet received, and we multiplied and said we made a proportion of saying we're saying 4 over 12 times times the salary that was supposed to be received by Ibrahim, which is 84,000. And then with that we got 28,000. So that is the balance that is supposed to come on the credit of Ibrahim. Then salary we are saying 28,000. Then obviously we have also interest on loan. And we are saying also the unpaid part of the interest on loan is also the one that is supposed to come on the credit of the current. So if you come here, loan here, we are told that the loan borrowed from Ibrahim by the partnership was 6,000 and only 3,000 was on loan was paid out. And when we calculated that interest on loan, we said, let's go back there to the instruction. The interest that was supposed to be paid is given the year interest on loan. Let's see it. Let's try to look at the rate there of the interest on loan. Right, here is the interest on loan, which is 4.7%, which is 0.127. So if you come here, this 12% we are supposed to say let's try to create some space there so that we make that working. Right, we said 0.127, which is 12.7%. Then we multiplied by the loan is 60,000. And what we got there was 7,620. That was the interest which was supposed to be paid, but what was only paid was 3,000. So the remainder minus 3,000, we get the remainder that was not paid. And we are going to see that we are going to get 4,620. So this one is the one that is supposed to come on the credit side of Ibrahim, is interest on loan. So here, interest on loan, we are saying 4,620. So that's what we have on entries. But we are left again with the share of profit. The share of profit, which is the appropriation figure. The appropriation figure. Remember, we calculated there, and it's 52,000, sorry, 53,525.90. So that's the last entry that we have on the credit side. Then we go to the entries that are supposed to come on the debit. Remember, we have interest on drawings and also the drawings figure. Let's start with the drawings. So drawings, we go there to check it in the list of balances there. We have drawings, it's here 296 for Ibrahim. So we're going to put that one, 296,000. 296,000. Then we go to the next one, which is the next figure is interest on drawings. Interest on drawings. So both drawings and interest on drawings comes on the debit side of the current account. The interest on drawings figure, we can always find it in the statement of changes in equity. So we can go up there again to check the figure that we have for that one. Interest on drawings for Ibrahim is there 1,000. It's 14,800. 14,800. So we are going to put that one. 14,800. So here we've got 14,800. Right, so that's what we have there. So we can put our 14,800 here. So this is the last figure that we're going to enter. Then obviously we want now to balance this account. We know how to balance. We add the total of the debit, we put it aside, then we add again the total of the credit, we put it aside. So that's what we have. When you do that, we compare the totals, the bigger totals come in between the double lines. Then we decide where we put a lesser total. That's where we are going to have a balance CD with the difference between the two totals. So if you add the total of the debit and credit, you are going to see that the credit, let's see there, we are going to see that the debit is the bigger side. So it's going to come in between the lines as 300 and 10, 800. Both sides. What we have there. Then if you subtract 310, 800 minus the total of the credit, here you are supposed to get 143,771.50. And this is obviously going to be our balance CD. And our balance BD obviously will come to the opposite side in below the double lines. So we are seeing that we're also having a debit balance there in the current as a closing balance in the current account of Ibrahim. So here, that's where it's going to come our balance BD with the same amount of CD, which is 143,771.50. So that's what we have, guys, in terms of this question on partnership. This is financial accounting N5. Like those who have been subscribed, please subscribe and share. We are still coming as we prepare for exams. More videos are going to come. Turn off the notification button so that you get notifications of new videos that are going to come as we prepare for exams. So take note, this question had 49 marks, which is very important. Bulk of the marks are here. Let's be prepared for partnership. Let's practice and wish you the best once again in your upcoming results. We'll meet again in the next video. With that, I'm signing out.